I'm Owen Bigland. This is the Inside Edge video blog. Okay, as promised, every couple of months I give you guys the stats from the Greater Vancouver Real Estate Board. I do a quarterly update, but let's just do one here for the stats just came out for July 2022. So the big news is that the detached market has now slipped into a buyer's market, which I'm going to get to in a minute. But as you guys know, I do these stats every month and a half, 2 months. I'm not a huge believer in, spewing out stats from the Greater Vancouver Real Estate Board. You guys know the way I operate. I've been in this business for decades. I'm just a big believer in buying your principal residence, enjoying it, hanging on to it, paying it down, keeping it for 15, 20, 30 years, or buying an investment property, putting a tenant in it, and call it a day. And revisit what it's worth after your tenant or after you paid off the mortgage in 20 or 25 years. Keeping focused on these monthly stats, you never treat real estate like it's a stock, trading in and out of. I think people pay way too much attention to the monthly statistics, but of course, as a realtor and running a blog about real estate, we've got to put them out there. But as expected, the sales have really started to drop here. Sales for last month were down 35% from our 10-year average. So this is one of the lowest Julys for sales activity we've had in about 10 years, down 32% from our July average of over the last 10 years. But the other thing is, though, you want to look at where the listings are at, and listings are down 25% from June of 2022, and June of 2022 was already a fairly low month for listings as it was. We're about 10% below what our 10-year average is for listings. So listings have also been down, and that's why you're not seeing a whole lot of major price corrections right now, at least not yet. Pricing on average for the average home is down about 1% over the last month, but it's up year over year by 11.8%. So prices are up, but they are starting to trend a little lower. Sales to active listing ratio. So you guys know this is the cleanest stat. It's the best stat to use because it takes into conjunction sales with listings. Because all you hear on the media right now, and I've blogged about this many times over the last 10 years, Vancouver real estate sales plummet 35%. Sales drop 30% or 20%. Well, sales don't mean a whole lot unless you look at it in conjunction with the listings. If the sales are down 30%, but the listings are down 25%, well, it's really not all that bad. And we are running, fairly low inventory here, about 10,000 units total, or homes in the Greater Vancouver Real Estate Board. That's well below our 10-year average. Keep that in mind. But sales to active listings ratio here is a nice clean stat, whether it's a buyer's market, a balanced market, or a seller's market. I always throw this out. Anything below 12 is a buyer's market. From 12 to 20 is balanced. Over 20 is a seller's market. For townhouses now, we are at exactly 20%. So we are right on the cusp between a high balanced market and a seller's market still. Condos are now at 24.5, so still well into a seller's market on condos. But here's the interesting stat. Detached homes have slipped into buyer market territory at 11.8%. And again, anything under 12 is considered a buyer's market. So they've just now slipped into a buyer's market for detached homes. Now, this is a real precipitative drop. I blogged about this a few times earlier this year. I mean, back at the height of COVID, let's call it 18 months ago, that detached market was hovering close to 40%. Strong, white hot seller's market. Now, in the last 12 months, that has slipped from close to 40 all the way down to 11.8. So it's in buyer's territory here. And again, I kind of forecast this in talking to my sellers late last year and earlier this year that were considering selling detached homes. I blogged about it many times here. When interest rates go up, and we were due for them and we knew they were coming, the market that's going to be hardest hit are the higher priced homes, the luxury condo market and the detached market. They are much more influenced by interest rates because it's a much bigger purchase price. But the detached market now, big news, is now into a buyer's market. And I was telling a lot of my sellers that late last year and early this year. If you were considering selling, get it on the market this past winter or this spring, because interest rates are going to be hiked, and that will be cold buckets of water, especially on the higher end product. which is the detached market. So we'll see where this goes. I could see this getting lower because we're due probably for at least another 1 or 2 more hikes here, maybe 3. Every one of those is going to have an effect on the detached market. Now, mind you, prices are still way up from what they were 2 years ago. We were due for a correction. It was only a matter of time. We knew interest rates were going to be going up. So that's where it's at. What I would say, just in a nutshell here, there's no panic out there right now. I'm going to predict that August stats from the Greater Vancouver Real Estate Board are going to be some of the lowest sales activity we've seen in at least 5, 6, 7 years, maybe a decade for August. And the reason for that is that most realtors, at least the high-producing realtors, are gone for the summer, including myself. As we speak, I just got back last night from a 2-week trip to Los Angeles, and in a couple of days, I'm going to start packing again, and I'm going away for a European trip, and I'm not going to be back until the end of the summer. And, you know, the top level realtors, let's call it the Medallion Club, the top 10% of the producers, remember, they do about 80% of the business. The top 5% of realtors do the lion's share of that 80%. So it's a very segmented market. The higher end established realtors like myself are doing the lion's share of business. All my colleagues this summer have told me the same thing. I'm taking the summer off. These higher interest rates, they're going to cool the market, but it's a welcome bit of a respite for us, because COVID really has put 3 years worth of sales, compressed 3 years worth of sales into 2 years. So a lot of realtors have been busy. I've been swamped. It's been an incredibly busy first 6 months of this year as well. I'm at record-setting territory again for 2022 for sales volume, dollar volume, all that stuff. So a lot of realtors, and even in more balanced markets, August is always a very slow month. A lot of realtors take a break. So you're going to see August numbers even lower when I do this blog in another 5 weeks or so. But let's see what happens in the spring. Starting in late September, October, November, our fall market, that'll kind of tell us a story of where prices are at, where that detached market's going to go, the full impact of the interest rate hikes. We should see more inventory. Right now, inventory, there's very little for sale. If you're looking for a good 1-bedroom condo downtown under 700, 750, there's very little for sale right now. If you're looking for a townhouse or a duplex on the east side, very little for sale. But that will change after Labor Day. Mid-September, late September, we'll start to see more listings hit. I know I've got probably 5 or 6 listings in the queue right now that I'll be listing after Labor Day, off for the summer. A lot of realtors are like me. We'll start to see that inventory come up. The question will be is, are buyers going to step up at that time? Now, I've got a lot of buyers. I've got a number of investment buyers, and I've got some first-time home buyers and some people looking to move up market. Just nothing for sale right now, and we'll pick it up after Labor Day. But is there going to be more buyers or enough buyers to satisfy or to at least absorb the new listings? And we'll see. Time will tell. Too early to tell right now. But for right now, there's no panic out there. Sales are down, but inventory is also incredibly low. It's going to be the lowest, I think, probably in a decade for August. It's going to be an incredibly slow month. We'll see what the fall brings. Not much else to say on that. Interest rate hikes, more of them coming. Tough to get a real beat on the market right now because it's the dog days of summer and a lot of realtors are on vacation. Stay tuned for more updates as we move into the fall. We'll see where the market goes from there. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.